Good afternoon and welcome to our webcast. COVID-19 relief in 2021, what employers need to know. For those of you who I've not met, I'm Dan Meyer, publisher of BizTimes Media. Thank you for attending today's webcast, which is presented by Davis & Kielthau, Old National Bank, and SVA certified public accountants, and powered by BT360 Content Solutions, which is the storytelling arm of BizTimes Media. The new COVID-19 relief bill signed into law on December 27th provides additional economic relief for business owners if you know what to look for. In addition, the new administration will need more changes on the horizon. What are the immediate opportunities for your business and what will the potential changes mean to you? There are strategies you can employ right now to take advantage of the recent COVID-19 relief bill and prepare for what's next. In today's webcast, our expert presenters will discuss and help you navigate your way through a variety of topics, including updates on the PPP, the Paycheck Protection Program, working with the SBA, processes and financing programs beyond PPP, stimulus legislation, tax credits and final guidance on PPP loans, regulatory guidance, what to anticipate from the new administration, the Consolidated Appropriations Act, modifications to the CARES Act, and more. So many of you are aware of the second round of the PPP. I've talked to a lot of people that are in the process of that particular opportunity, but there are many, many more other and as important topics our presenters will cover today. The slide deck is available now if you want to take notes and follow along. I believe you can find it on the chat feature on your screen. It's also accessible after the program on our website. At the conclusion, you'll also find an attendee survey, which we would appreciate if you could fill out as we look to plan future webcasts. So this is our 25th year as an independent family-owned business, which is hard to believe. And BizTimes Media is the only locally owned business media company in the region. And it wouldn't be possible without your support, whether it's attending events like this, print or digital advertising, event sponsorships, or the storytelling arm of BizTimes Media, as I mentioned, BT360. I guarantee that we'll work hard every day for the next 25 years to earn your business and to help you grow your business through our custom and integrated marketing programs. If you're interested, please contact Linda Crawford, our sales director. In addition, our award-winning editorial team is always looking for story ideas, especially if your business is expanding or moving, or you're buying another business, or if you have any other news, operational insights, or other information you'd like to share, please let us know so that we can help you tell your story. And in this past June, we launched our Insider Subscriber Program. For $8 a month, you can be an insider and receive several insider benefits, including access to all the content produced by our editorial team. It's also your opportunity to support local journalism. So before I introduce the presenters, I want to mention that today's webcast is being recorded and you'll be able to access it on demand along with the slide deck, which you should be able to access now in the chat feature, but you'll be able to access the on-demand recording on our website later today. And if it's not later today, it'll be certainly first thing in the morning. So as I mentioned, go to the chat feature, you can find the slide deck. And so now on to the presenters without further ado. So if you all could just say hello after I introduce you, that would be great. So first off is Larry Glusman, commercial finance and corporate attorney with Davis & Kielthau. Welcome, Larry.
Hello, good afternoon, everyone.
Thanks. And Lori Meyer with Davis & Kielthau. She is the employment and litigation attorney. Lori.
Morning or good afternoon, everyone. I'm glad to be here.
Yeah, glad to have you. Jeff Roseland is the SBA director with Old National Bank. Jeff.
Good afternoon.
Welcome, Jeff. And Paul Sackman is vice president, business banking and executive with Old National Bank. Paul.
Hello, thanks for having us, Dan.
Welcome, Paul. And Dan Glomsky, CPA and principal with SVA Certified Public Accountants. Dan.
Hey, thank you, Dan. I'm looking forward to talking and sharing as much information as possible with everybody.
Great, glad to have you. And Nancy Melberg, also with SVA. Nancy is CPA and principal. Welcome, Nancy.
Good afternoon, everyone, and thanks a lot for having us. We're excited to go through some of this information.
Yeah, I'm really looking forward to it as well as a business owner myself. So this is great. So again, please submit your questions. We have a number of questions that were submitted in the pre-registration, but anytime you want to submit your questions, please do that in the Q&A feature. So now I'd like to turn it over to Paul Sackman with Old National Bank, who we'll tackle probably the most topical issue of today, more of the PPP. So Paul, I'll turn it over to you.
Thanks, Dan. Good afternoon, everybody. As you just heard, I'm Paul Sackman from Old National Bank, and I'm going to jump right into the Economic Aid Act that was recently passed. I'm going to just briefly touch on the SBA/PPP parts of the bill. I'm going to let some of the other expert panelists here go through the other aspects of that bill. And like Dan said, PPP is the popular topic, but I first want to touch on the SBA enhancements that legislation has passed. In the past, I know some business owners may have been a little hesitant to take on SBA loans due to the costs and the work involved, but these enhancements that waive the fees is a big advantage that allow people to take advantage of opportunities here this year. So the SBA is also covering some payments on these new loans. They're increasing the guarantee for banks, so we're a little bit more flexible to take on risk for new loans. And then the other big important part is those borrowers that have existing SBA loans, you're getting another round of payments covered. You experienced it in 2020, so it's a great benefit to have coming back again in 2021. If we can go to the next slide. And then I'm going to just give a quick overview of the PPP second draw program, which I know is the hot topic with many people. A lot of people probably read the guidance and know a little bit about it. So I'm not going to go too much into great detail. I'm going to leave that up to my friend Jeff and others on this panelist to go deep into it. But this time around, we're hoping it's going to be a little bit easier than everybody experienced the first round. Business owners and banks are just more familiar with it in general. And I know Old National, we processed about 10,000 of these round one loans. About 6,000 have already applied. And we're better set up this time around. We got online applications, automated systems, because we just want to get the money out to business owners sooner than later to help everybody out. So, hopefully we got it set up for our customers to do it fast and help non-clients as well. So, and the other big major change to the PPP round this time around is the revenue reduction requirement, which I know most people are aware of, but you just got to have a 25% reduction in any one quarter in 2020. I do suggest every business owner look closely, even if you were lucky enough to have an even revenue year or a positive increase in revenue, you might have had one quarter that was negative. I know quarter two is that magical quarter that a lot of people had troubles with. So the other aspects to qualify for this second draw program is you got to be able to use up your PPP-1 loan proceeds. You don't have to have already applied for forgiveness, just certify that you have used them by this time. As for the loan amount, it's going to be similar to round one, about 2.5 times your average monthly payroll, which is calculated on your 2019 or 2020 information. The great benefit too is they're helping out a little bit extra on the hospitality industry. So those with those certain NAICS codes can get 3.5 times their monthly payroll, which is nice because they're obviously an industry heavily impacted during these last several months. One other impact this time around is they have a max loan of $2 million, which may not impact many business owners, but hopefully that, along with the revenue reduction eligibility, means that the allowed or appropriated funds are going to last a little bit longer this time around. We don't know for sure, but hopefully that is the case. So that's my general overview of the hot topics with bankers right now. So I'm going to kick it on over to Larry to go through some more details.
Great. Thanks, Paul. And Jeff will follow me for the next few slides to talk about the general changes that occurred to the PPP program due to the legislation that was passed on December 17th or 27th rather. We thought we'd start off by talking about the trending topics pre-EAA. So essentially there are these 4 categories that folks of one sort or another have been dealing with. In general, the forgiveness process, and again, we'll hear from Jeff a lot more about that. But essentially, a lot of folks are in the process of putting their forgiveness applications in, or have already submitted them and received results. So in general, we're seeing what the SBA has to do in terms of how fast those are being processed and what sorts of questions they have. And so and we're waiting on even more guidance from them. I guess the second topic here, the audit plan for loans in the 150 and greater category. is due by either the 9th or the 10th of February, depending upon how you count. But essentially, they were given 45 days to come up with some metrics to try to help folks understand what the SBA really is going to look at behind the scenes in terms of audits. Remember, folks, that even if you have been granted a forgiveness determination by the bank, the SBA can still weigh in on that, and in any event can weigh in for many years theoretically on whether the basis for the loan was still adequate. So anyway, we're definitely looking forward to that guidance second week of February. The other two topics, the loan necessity questionnaire and the change of control transaction, are some things that happened over the last few months. The necessity questionnaire, as I mentioned, was a bit controversial, remains controversial. The original certification was that the current economic uncertainty makes the loan request necessary to support the ongoing operations of the business. The questionnaire, and this is for the 2 million and up category, for the audit category folks, seems to brings in after the fact factors for folks to have to think about, which seems a bit unfair, given that they had to make the certification back in time on information that they had at the time. So in any event, there's that. I know Jeff can help us out with a little more of an understanding, I guess, of this topic as well. And then finally, the change in control transaction, some more guidance that came along. So if you're buying or selling a business and one or the other or both of the entities have PPP loans, there's guidance as to how to handle that. Essentially, in most circumstances, you wind up escrowing the money from the proceeds or otherwise that would cover the forgivable piece. The transaction takes place, and then down the road, once forgiveness is determined, that escrow account presumably would be released if forgiveness is granted. So we'll turn over to Jeff. I'm not sure, before we switch slides, Jeff, is there maybe on the necessity questionnaire or on the forgiveness piece, something that you'd like to lead with?
Yeah, you bet. No, I'll just, I'll kind of fill in maybe some practical information, what we've seen at Old National. As Paul said, we did close to 10,000 PPP loans through the first round or the first two rounds, kind of depending on how you look at it. And to date, we've submitted close to 6,000 of those applications in for forgiveness. So we know that that's well above or well ahead of kind of where the industry is at in terms of, you know, the dollar amount, as well as the number of you know, kind of first two rounds of applications that have gone in for forgiveness. So we've gotten a lot, you know, we got a pretty good you know, kind of base of information and what we're seeing from the SBA. And so I'll kind of pass along a couple little tidbits that are kind of good. But what we've seen with the majority of the loans that are under 2 million. So that's the vast majority of the loans. I think 98% of the loans, I believe, were less than 2 million. The SBA has an automated process that they're going through with the approval. And kind of the bullet point that was here was what we're seeing is about 10% of the applications, or at least of our applications, but I think that's in general, are getting pulled out of that automated process. And that automated process, typically within a week or two, we're seeing payments on those. So again, for 90% or so of certainly our borrowers that have submitted forgiveness, once the SBA kind of started the forgiveness process, we're seeing payments within a week or two. So the forgiveness request has been approved. To date, all of the requests that have gone in that we've sent in and we've received payments on have been 100% forgiven. So what the request was to us that we then forwarded on to the SBA has come back at 100%. Some of those were less than 100% forgiveness that the borrower put in, but whatever their request was, 100% has been coming back. So a lot of the automated ones, it's working very well, very quickly. We're happy with it. I know our borrowers are happy with it. The other 10%, we know that there are just some random ones that are getting pulled out and being looked at a manual review process. And the SBA has 800 or so people that are working through the manual review process for ones under 2 million that get pulled out of that automated process, as well as the ones over 2 million, that all of those have to be looked at manually. But what we're seeing there is of that 10%, some of them that are I guess are coming out randomly, and then some are being flagged for different reasons. That's what we don't know, and that's what we're hoping to see in February, is that there'll be a little bit more transparency around which ones are getting flagged and why they're getting flagged. Ultimately, the SBA is trying to get to fraud, and if there's any issues from a fraud perspective, and borrowers say that we're ineligible. So that's kind of what the intent was. What we don't know is exactly kind of what those metrics are, and hopefully we'll get a little more transparency around that so that the entire industry can understand when one will get flagged for a manual review, and again, we can do a little bit more due diligence on the front end to provide some more information before it goes in for forgiveness. So that's the good news is 90% are moving pretty quick. The other 10%, it's taken a while. We've had some that have been in for several months. Unfortunately for those borrowers, we're not able to get any sort of feedback from the SBA on specific loan status. They'll give us kind of a general response that they're working on it and they'll get to it as soon as they can. But we do find out, we do get questions. And then as we get those questions, we pass those along to the borrower, provide more information to the SBA, and we started seeing some of those ones that are in that manual review process turning around and getting those loans approved. So that's the good news there. Well, I'll make one comment on the loan necessity questionnaire that we've been getting a lot of questions on the ones that we've submitted in. The majority of our loans that were over 2 million, we've actually submitted in for forgiveness. And we're starting to get a lot more questions from the SBA, and we're just starting now this last week and another one this week where they have been approved, and so we're starting to get forgiveness payments on those loans that are above 2 million. So other lenders, other borrowers might have seen that as well. We're just starting to see it now with ours. So hopefully that will start to ramp up now too, from kind of where we're at now, because again, there are not nearly as many as under 2 million, but there still are a lot of borrowers that are over 2 million that have had their forgiveness application in for several months and really haven't heard anything. And so now there is starting to be, there is some movement, and so hopefully that'll start picking up quite a bit quicker with the pace. Why don't we go to the next page, and I'll kind of talk about some other things as it relates to the recent changes with the last act. With PPP round 2, there is a deadline, so it started. It's open now. The SBA officially opened for all institutions on Tuesday. Some institutions were allowed to put in applications last week. We have just started receiving approvals from the SBA. So, and it's taken a couple days for them to kind of ramp up. But one thing I'll let people know that is the experience is going to be a little bit different than what it was in the first round. In the first round, the banks really went through and applied for the forgiveness with the SBA directly. And in some cases, we were able to instantly get the SBA approval number. The SBA, to kind of help with the fraud and make sure that things are working better in this round, they are taking more time. So what they've signaled to the industry is it could be a 24 to 48 hour turnaround from when we submit an application to the SBA before they actually provide the approval, and then we can move into documentation and funding. So that's something good for everybody to know, that it's going to be a slightly different experience. It might not be something that happens within a day or two, because we've definitely had some in those first 2 rounds where we were getting loans funded almost same day as we were getting the applications coming in, or certainly within a day or two. So this is going to be a little bit different experience for borrowers. Another thing that I'll say is that what we're seeing now, and this, I don't think this has been signaled out to everybody, but this is sort of a little bit of insider information, I guess, for everybody, is the SBA, is they're looking at these second draw PPP loans. They're putting in kind of a limit or a governor on the total amount of financing on a per employee basis and the dollar amount is $30,000. And that's what the SBA is telling us right now, is that they're limiting those second PPP funds to $30,000 per employee. So what that might mean for certain borrowers is if you're using your 2019 payroll information and you're applying based on your employment base now, which might be significantly less than it was in 2019, you might have an issue and you might be in a situation where that loan request is more than the $30,000 per employee. The bank will get basically a rejection or I guess a question from the SBA and asking us to modify that application because of that issue. So again, that could get modified going forward. It really kind of depends on the pace of the funding and how quickly it's going. But they tried to put that governor on there to limit that so that as many businesses and as many employees could benefit from this next round of PPP funding as possible. So that could change, but that's kind of what we're seeing right now, and so that's kind of a good thing to understand, I think, for borrowers at this point in time. I would expect that depending on how the funding goes, that deadline could get extended. If all of a sudden we run out well before that deadline, given kind of the new administration, I could see that there would be more money added. So, certainly take advantage of it as quickly as you can, because obviously, getting the funds sooner is better rather than later for your business. But I think that there's going to be plenty of money through that deadline and maybe even beyond that deadline for this next round of PPP. Jump to the next point here, deduction of expenses. This was a big win for businesses. There was a lot of pushback, a lot of confusion around taxability of expenses. So at least at the federal level, and we'll get into this on the state level in some slides later, but at the federal level, any of the expenses that you paid for with a PPP loan will now be able to continue to be deducted for tax purposes. So that was a big win for the industry and for all borrowers. With this next round of PPP funding, they did expand the expenses where the money could be spent. So there's the original 4 main categories, and you can see those. I think we're all well aware of those, but there were a few more that popped up. First off, I guess, there's a few things that now can be added into payroll beyond just what was there before. I think the big one is there's with the group life and disability and some of the other benefits that the employers are covering can now be added into that payroll calculation, so you can get a little bit more of a loan. But the additional categories on the expense side, operation expenditures, basically that's software type things or cloud computing or anything that you've done to kind of update your business from more of an IT perspective can be included. Property damage, with a lot of the riot stuff that happened, unfortunately, the businesses were impacted. Those expenses can be paid for with a PPP loan now. Supplier costs, that's anything as it relates to PPE. I got to get my acronyms correct here. And other things that your business might have done to just be able to operate in kind of this environment. If you had additional costs, you can now pay for those as an eligible expense with your PPP loan proceeds. And then similar covered, worker protection expenditures. So just kind of what I said there. So kind of what you did both for your employees and for your business to operate in this environment. So that's a nice win, I think, for a lot of companies. The other thing, and we just got some information on this that came out late the other day, so we're still kind of absorbing the latest forgiveness information that we received from the SBA. But the biggest win, I think, out of this, and something that had been signaled, is that now you're able to use a much more simplified forgiveness application for loans up to $150,000. So basically, it's a certification. You do not need to provide documentation with that certification. So it really is kind of on your honor. The SBA might come back and audit and ask for some additional information, but at least for those loans up to 150, it's gonna make it a lot easier for us on the banks, on the bank side, as well as you as borrowers, that it's just that form that's out there, as well as then the no documentation. And I know that we've got a bunch of resources and links to things in the presentation, so you'll be able to actually see what that application looks like in those links. So that's on a later page in the presentation. If you want to go to the next page. So another nice change that we got was there's a little bit of flexibility that was offered around that forgiveness period or covered period, as the SBA calls it. When it first came out, it was 8 weeks, and that was that. And then they came out with additional legislation that expanded it to 24 weeks. So you kind of had one or the other. You could go 8 weeks or 24 weeks. And now with the newest legislation, basically they said that your covered period or your forgiveness period is anywhere between 8 and 24 weeks. Whenever you apply for forgiveness, or whenever you kind of run your expenses out, if that's somewhere in week 10, or if that's in week 16, when you apply or you use that period, that is then considered your covered period. So it's not, there's no kind of wondering what that means. If it's 8 or 24 weeks, do I have to go to the end? Do I not? Now it's basically your choice between 8 and 24 weeks. There's an expansion of some loan eligibility here for the next round of PPP. So, somewhat limited, but as you can see here, there are a couple of other organizations and companies that are now able to take advantage of PPP funding. And this can be for a first loan or a second loan. I think that's one thing that's important to note, and it's kind of illustrated in the third point here, is that the PPP loan program that's open now, it's for second loans, but it's also for borrowers that never took advantage of it in the first place. So first loan PPP borrowers can take advantage of the program now. So, and basically for those first loans, it's kind of the same calculation, or pretty close to what it was before. The big thing, it's 2.5 times the average payroll. And again, you can get up to $10 million for that first loan. As Paul talked about, for the second loan, there's the 2.5 times, there's the 3.5 times if you're in the hospitality industry, but the limit there now is $2 million as far as the loan amount. Good news is for those first the first loans, you can use your 2019 or 2020 payroll information. And another nice thing that came out as it relates to kind of the forgiveness change that caused a lot of issues. We had a lot of this with our borrowers. The idle advance was being reduced from your PPP forgiveness payment. There was a lot of confusion about that. Honestly, SBA didn't communicate that very well. But the good news is the new legislation, they took that away. So any borrowers that now are applying for forgiveness, the idle advance will not be reduced from your PPP forgiveness payment. For those that did have their forgiveness payment reduced by the idle advance, in the next few weeks, we expect that the SBA will be making additional payments to us, and then we will be passing those along to the borrower, either to pay down their loan or reimburse them for any payments that they had made. So that'll all get trued up here over the next couple of weeks for all borrowers. So the last point, access to first draw proceeds. I think I kind of touched on this, or not. This is a little bit different. So if you made a mistake with your first PPP loan, there is a mechanism for you to be able to get additional fundings because of that mistake. So there's limited situations where that applies. The big thing is you can't have applied and received your forgiveness payment. If you've already received your forgiveness payment, you're shut out from going back and basically fixing that first draw loan amount. But if you haven't done that and there was a mistake that was made, you can go in and request for additional funding based on a mistake you made. On the other side, if you did if you made a mistake and you got too much money, there's also a process for that. And again, we'll make those notices or links to those notices available to everybody, so that in those situations where there's been a mistake, you know kind of what to do at that point. Next page, please. So a couple other nice little nuggets from the latest legislation, and I'm not going to get into a lot of detail here, but there's a new grant program that's out there for shuttered venues. So you can kind of see what that looks like here with a couple of these bullet points. The key here is two things. It's a direct program or a direct grant program with the SBA. So there is a link to that program that it will be on our resource page. So if again you're in this industry, you can definitely go out and look to get and see if you're eligible and see if you can't get a grant directly from the SBA. One thing as it relates to PPP though, you will not be able to apply for a second PPP loan if you go through this grant process. So just to be aware of that. Couple other things, set asides. This is just, again, just to make sure that I guess the smaller businesses, smaller lenders didn't get crowded out by large businesses or large banks that were taking up all of the PPP funding. We saw some of that with the very first round when the PPP program opened up. So again, they've created kind of these set asides or carve outs in the total authorization to make sure that borrowers in these segments or lenders in these segments are able to get loan dollars through the PPP program. And then the last thing that I'll note, it's on the application. This has come up a few times though. If you have a bankruptcy in your past and it's been dispositioned, not a problem. You can continue to apply for a PPP loan. If you're currently in bankruptcy or there's pending bankruptcy, then that is an automatic kick out from the application, and we're not able to move forward with a PPP loan in that situation. So I think those were all the topics I was going to cover in my slides. I don't know, Paul or Larry, if I missed something that maybe you want to jump in on before we go to the next one.
So actually, this is Nancy. I just want to jump in real quick and mention that I think on slide 11, we talked about that 25% reduction in revenue, and that's per quarter, but I believe there's also a provision that somebody can use the entire year, correct, Jeff?
Correct. That is correct.
They
Yep.
don't keep their books and records on a quarterly basis, and they just have maybe an annual tax return or annual information. They can compare annually 2020 to 19.
Absolutely. That might be an easier way for them to go than to kind of, because obviously if you're down 20% annually, you're going to definitely be down 25% in one of those quarters. So that's kind of where the SBA settled. If that's an easier calculation for a borrower, then absolutely the annual stuff that does work.
Thank you.
All right. Well,
I think Larry's got the next slide.
yeah, go ahead and move forward.
Thank you. So we wanted to just really quickly on this, just give you some feel for the broader bill that was passed. Had some impact on the bankruptcy code. So to the extent that you're a debtor or a landlord or a tenant or a vendor, certain of these points may be germane to you. Subchapter 5 is a new section for smaller Chapter 11 candidates. It came into being just in February of this year, and almost immediately the CARES Act raised the debt limit, the debt ceiling, almost tripled it to $7,500 or $7.5 million rather. Right now that's set to sunset at the end of, or almost at the end of March. It's been interesting to see the different debtors that have come in because it's allowed a lot of bigger, smaller companies to come in. But the subchapter 5 is still a brand new area of the law, but it's designed to be simpler and less expensive than traditional Chapter 11. So there is activity there that folks should be seeing. The bill did provide that the SBA does have some authority, if it chooses to act on it, to allow PPP loans to debtors in this form of Chapter 11, also to family farmers in a Chapter 12, or to self-employed folks in a Chapter 13. There's been no further guidance on that. We don't know how that's going to play out, but it is at least a possibility if the SBA administrator wants to go that way. The next couple things relate to landlord-tenant situation. There's a rent delay extension that provides an extra 60 days for unexpired non-residential leases in subchapter 5. And then the category below, where we're talking about all business debtors, not just those, the time to assume or reject an unexpired lease, which is a very big deal for folks in bankruptcy, now has been extended an additional 90 days. So that gives debtors more chance to figure out how they're going to reorganize. And there's also some preference protection now from the clawback that can happen in a preference situation for certain forms of covered rental and supplier arrearages. And both of those, as I note here, are available for 2 years for now. Very briefly, and it's just in a list here for consumer debtors, there are more than just these 5, but there are a number of changes that were made to liberalize things. Most of these extend for about a year, but some mechanisms to address some inequities that were going on based on certain bankruptcy filings. So that's going to wrap up. Well, actually, if we can go to the next slide for just a moment, please. We've put together this resource page for the PPP stuff. The last two links for Treasury and SBA are the home pages where Jeff and Paul and I land all the time trying to figure out what the new news might be. They're updated sometimes a couple times a day. So if you're looking in general for anything that relates to new news on Treasury or SBA moves on the PPP, those are the places to go. The other links that we have here, most of them can be found on those pages, but we just singled them out so they'd be easier to get to. And then I found that this House Small Business Committee summary, which was put together before a lot of this regulation was put out, is a really helpful. It's a 10-page, relatively small font piece of literature, but it was put out by the House Small Business Committee, and it really is a great summary of what's in there, PPP, and I guess a little bit beyond that. So I would definitely recommend folks check that out.
Thank you very much, Larry, Jeff, and Paul. This page is a huge help for those that want to get immediate access. And again, you can get access to this slide deck with those resource links in the chat feature. So before I turn it over to Lori Meyer with Davidson Keelthau, I want to remind you to send your questions into the Q&A feature on the screen. That's where you also find a link to the slide deck, as I just mentioned. So Lori, there are a number of important issues for us to know regarding employee and family leave. So I'll turn it over to you.
Good afternoon, everybody. I'm really glad to be here. I'm here to talk a couple of minutes today about issues that are impacted with regard to this legislation in connection with employee COVID-related leave. Let's go to the first slide. So most employers, at least those under 500 employees, are pretty well versed at this point in the FCRA. That's the Families First Coronavirus Response Act, which was basically comprised of two different types of leave. One being the emergency paid sick leave. That's for folks who are either ill with COVID, are seeking a diagnosis and that kind of thing. And then the other type of leave was the expanded emergency family medical leave, or I shouldn't say emergency, but expanded FMLA leave, which made that FMLA leave paid in connection with school or childcare unavailability. What happened with regard to that, which was part of the original CARES Act, is this legislation let those mandatory provisions expire. So as of January 1st, this has become a tax credit statute because everything is become voluntary only. So employers who voluntarily decide to provide either emergency paid sick leave and we'll talk about that in a minute, expanded FMLA leave to employees only through March 31st may claim the tax credit. And we'll talk about who would be eligible for that in a second. One little item that it doesn't appear in these slides only because it was only issued this morning was the Biden administration's statement, the issuance of, I think it's called the COVID-19 Response and Pandemic Preparedness Statement. That includes a number of things, including executive orders having to do with reopening schools and OSHA protections and things like that. But he also, President Biden, called on Congress to extend and expand paid emergency COVID-related leave. So stay tuned here, but as of now, Congress has not acted, so it is only through March 31st. So go to the next slide. So we should keep in mind that the FFCRA always only provided a maximum of 2 weeks or 80 hours of emergency paid sick leave and a maximum of 12 weeks on the expanded FMLA. There is not a new bucket of leave provided under the new legislation. So you have to, when you have a leave, if you are inclined as an employer to grant the leave in 2021, you have to look at the particular employee involved. If an employee, I have an example here, if an employee used 1 week of emergency paid sick leave in 2020, they may have an additional week of EPSL in 2021, but if they've used it all up, it's gone. There's not a new bucket of time. Now, of course, there's nothing that prevents any employer from providing paid leave or unpaid leave or anything like that. But in terms of the tax credit is not available if the particular employee has already taken the leave. But remember that irrespective of EPSL, whether you're going to be doing that, whether you're not, if an individual has most likely in all circumstances, COVID-19 is going to be considered a serious health condition under your regular FMLA, which applies to employers that have 50 or more employees. So be aware of that. If they're taking care of someone in their family that has COVID-19, they might be entitled to unpaid job protected leave with reinstatement rights under the regular FMLA. And I just want everybody to be aware of that. So don't bypass that. And then the next slide, please. Okay, so then keeping all of this in mind as to how it has changed, what do you have to do what do you have to consider as an employer? First, you have to decide whether or not you're going to provide paid COVID related leave in 2021 to those, at least to those employees who haven't exhausted it. One of the things that's come up with my clients, a number of my clients, is, it's not an all or nothing proposition. There is nothing in the legislation that I've seen, that any of my colleagues have seen, that suggests you can't do one without the other. For example, a lot of employers, they're not providing the expanded FMLA for school or childcare unavailability, but they're recognizing that if you don't provide paid leave, especially given that there's a tax credit for it, to those who are sick with COVID or suspect they are, you're going to have a situation where sick employees who have no other PTO available may come to work sick and endanger the rest of everybody. So what does that mean? That means there's nothing that prevents any employer from saying, we're going to provide emergency paid sick leave to the extent you are still eligible, and take that tax credit, but we're not going to provide the expanded FMLA, or vice versa. That the key though is, of course, to decide what you're going to do and then communicate it clearly to your entire workforce. Because while I am telling you you can use discretion, but discretion can be a problem if there's disparate treatment among employees. You don't want to inadvertently get into a discrimination claim if you're giving something to one person and not another. So you should have a policy, or at least a practice. Decide what you're going to do, decide how you're going to do it, and communicate that. And I think that's all I have today. And I think.
Great. Thank you very much, Lori.
Yeah.
So our next presenter is Nancy Melberg with SVA. Nancy will discuss some of the important issues related to employee retention credit. Nancy.
Well, good afternoon, everyone, and thanks again for joining us. So I'm going to talk a little bit here about a credit that's getting a lot of attention that I think was a little bit silent because it was probably in the shadow of the PPP for so long. And I think now it's starting to make its way forward. So this employee retention credit, and I want to talk about this a little bit in phases because there was an initial first round, and some of the same qualifications from the first round and eligibility are going to carry forward into the second one. So let's talk a little bit about the FTE, or the eligibility based around the number of employees. So in the original one, this was 100 or fewer employees. Now I want to talk just briefly about what is considered an FTE for the employee retention credit, because that is very different than what is considered an FTE for the PPP. So for the employee retention credit, it's anyone who worked an average of 30 hours a week or 130 hours per month. So if any of you remember, the PPP was 40 hours a week was equal to 1 FTE. So we have a little bit of difference there. Also, related party wages do not qualify. So anybody who is related to owner, shareholder, partner does not qualify for this credit. If you have more than 100 full-time employees, only those employees that you paid to not work are eligible for this credit. So that's going to be the situation where maybe you were shut down for a while and you continue to pay employees. Those are going to be the wages that will be covered, versus if you were 100 or few employees, all wages are covered for this credit, all eligible wages. So again, a little bit of difference there if you're under 100 employees versus if you're over 100 employees. There is also something here about the credits, and we like to say within our firm, Dan can appreciate this, we say when credits collide, because we do have to look at all these different credits, and you have to take a look at where you're using the credit and where you're not using the credit to determine this credit. So wages that you received a credit under the FFCRA that Lori just talked about, you cannot use those. Same thing with wages that you use for the PPP, you can't use for this credit. So you have to kind of take a look at that. So this credit can be a little bit complicated. And I do encourage anybody, if they think they might be eligible for this, to reach out to their accounting professional and have them work through the credit for them, because it can be a little bit tricky. Next slide, please. So there is also some things that the business has to have for eligibility to this credit. So the business has to be fully or partially shut down. Now, this is very vague, so I did include a link here to some frequently asked questions about what does that really mean, fully or partially shut down. And I'm going to give you an example real quick that's right in these facts from the IRS, is if you were a car repair shop and you were still operational and you were open and you were still able to work on cars, but the supplier of parts had to shut down due to some government order, and you are no longer able to get the parts that you need to repair these cars, then you would fall under this order. So you could qualify for this. So there's a lot of good examples in here. I highly recommend people go out there and take a look if they think they might qualify for this credit. You also had to have, and this is in this initial round, a 50% or greater reduction in your quarterly revenue. So you're going to compare the same quarter 2020 to 2019. So if you're looking at quarter 2 of 2020, you're going to compare it to quarter 1 of 2019 and see if there was a 50% reduction. You would continue to take the credit until the first quarter that your gross receipts are 80% of the previous year. I know this is a little bit tricky for people. That's why I said if you want to reach out to a professional, they can help you walk through this. Next slide, please. So the other thing is the credit calculation. So in the previous phase, it was 50% of eligible wages up to $10,000. And that was for the entire year, so all quarters. So in other words, if you had an employee that had $10,000 in qualified wages, 50% would be $5,000. That would be the maximum that you were allowed for that employee, was $5,000. Now, the reason why I'm telling you some of the rules for the previous year for 2020 is because people do have the ability, if they haven't taken this credit, to go back and mend quarterly tax returns. So that's why I'm talking a little bit about 2020 as well. So how do you claim the credit? So the credit can be claimed on your 941 report. There was also a form 7200 that you could take an advance credit on. So one thing to keep in mind, if you took an advance credit, and then if you received too much, because then you're going to kind of true that up on your 941, you could be subject to some penalties. Same thing as if you reduce your quarterly tax deposits. So if someone anticipated a credit and they reduced their quarterly 941 payments, but then the credit ended up not being as high as they anticipated, you could see some penalties for failure to deposit timely on your payroll tax payments. So that's very important to remember, but most people will be applying for the credit on their 941. Next slide, please. So here's where it gets kind of fun. So the recent changes to the employee retention credit. So remember I talked about before, it was 100 or fewer employees. They have increased that to 500 or fewer employees. So the limit went up significantly on the eligibility of the employer. They also changed the reduction in the quarterly revenue from 50% to 20% or greater. So now you're going to get a much larger group of companies that are going to be eligible for this credit. The fully or partially shut down is still in place, so no changes there. But here's where it gets really fun. is now the credit is 70% of eligible wages up to 10,000. And it's also per quarter. So before it was 50% for the entire year, and now it's 7,000 or 70% per quarter per employee. So you could get up to $14,000 potentially, because this credit does expire at the end of quarter 2. So you would be able to apply for the credit for quarter 1 and quarter 2. You are now also able to even claim this credit if you took a PPP. In the original, or for 2020, if you took a PPP, you were not even eligible for this credit. You are now eligible to take this credit. So you could see the numbers went up significantly. So now we're allowed 14,000 versus in the previous 5,000. So I want to make sure that everybody is really taking a look at this, because I think there's going to be a lot more companies that are going to be entitled to this now. And we just want to make sure people are utilizing this if they have the ability to. So I know I went through this pretty fast. This was kind of the 10,000 view picture of it. But like I said, I think it can get a little bit complicated, but I want to make sure that it's on everybody's radar, because again, it's a great opportunity for businesses. So with that, I want to turn it over to Dan to talk about some of the recent changes we could be seeing. So Dan, with that, I'll let you take it away.
Great, thanks everybody. And I really look forward to the opportunity to share some thoughts here with you. I know we talk a lot about the PPP money. Do not lose sight of the employee retention credit. It's in, either if you're partially shut down or you have that reduction in revenue, either condition allows you to be possibly eligible for that credit. And it's really another access to cash if you qualify. But what I really want to focus on now is really what I see as really the President Biden platform. And the PPP money, the retention credits, all these other changes are extremely important things. But also what we want to do is not lose sight of kind of what maybe is on the horizon at some point in time with respect to a change in presidency, but also the result that, we're putting a lot of stimulus money into the economy, trying, and really not stimulus, right, as more of a necessity or support of the economy. And as a result, that's probably going to result in some kind of tax revenue generation opportunities to recover from that. And so I have really kind of quantified 10 things that are on or part of President Biden's platform when he was running for president, and then probably will be part of his administration as we go forward. So just cover them quickly. The first one is probably the corporate tax. And right now the corporate tax is at a 21% rate. Information we're seeing is that President Biden might want to increase that to about 28%. And that results in a $727 billion in revenue over a 5-year period. So it's a big ticket item. So we would expect some change of that. And again, corporate taxes are for like C corporations, not the pass-through entities and so forth. The next one, item number 2, is the elimination or limitation of the 20% qualified business income deduction. This is a 20% deduction that's eligible for businesses, a good majority of the businesses that are S Corp, partnerships, and sole proprietors. Not everybody qualifies for that, but the ones that do, it's a significant benefit for them. And so there's some expectation that there'll be some reductions in this area to the point of generating about $143 billion in revenue. So again, the first 2 items really generation of revenue. The individual income tax rates under the 2017 Jobs Cut Act, there was a reduction in the individual tax rates and took the highest tax rate down to 37% from the original 39.6. We expect that we're looking at maybe another increase in that level. Number 4 is a capital gains rate. And I think this one got a lot of press from the perspective of, capital gains rates are going to go away. And I think that we're looking at some expectation here that we're looking at about $1 million in income, and as a result, that any capital gains above that level might result in a ordinary tax treatment, which is a 39.6 rate versus a 20% tax rate. And this is a significant revenue generation, so we would expect some traction in this area. 373 billion in revenue projected in raising. Number 5 is going to catch a lot of people by surprise in the event that it happens. For many, many, many years, real estate professionals would buy real estate, and then they would go and take those proceeds and reinvest them into another property. And as a result of that, they were able to defer that gain that they had built up in those property acquisitions. And there's a discussion here that potentially if you're in an income situation over 400,000, that you might not necessarily have the ability to continue that process. It's kind of viewed as an unproductive tax cut for the wealthy is probably more of the motivation here. Obviously, there's some revenue generation in its bandwidth as well, but I don't necessarily know if that's the complete motivation here. Next slide, please. So number 6 and 7 really relate to the estates and gifts area. The first one is an increase in the tax rates from a 40% rate to a 45%. And again, trying to attack the taxability of the transfer of wealth and more of a motivation from that perspective. There is maybe a $20 billion revenue generation by both the increase in tax rates and then number 7 here, which is the lifetime exclusion on gifting. So currently we have a $11.5 million exclusion that an individual can gift to another over their lifetime. And that exclusion is very lucrative and really makes very, very few people's estates taxable. And we're seeing some information out there that the current administration might decide that a $5 million or a $3.5 million exemption is appropriate. And as a result of that, there'll be some more estates that end up being taxable, and as a result have some generation in revenue, but also taxation and kind of looking for the wealthy to contribute maybe some more to the revenue generation pie. The number 8 is also one for maybe going after highly comped individuals. And this is a situation where an employee pay Social Security tax, and currently it's 6.2%, and it caps out or stops collecting Social Security tax at $142,000. As a result of this bill, or this proposed revenue generation, we're looking at you would be paying tax at up until $142,000, and then you wouldn't pay any Social Security or Social Security taxes until you hit 400,000. Once you hit 400,000, it becomes unlimited at that 6.2%, which surprisingly would generate about 740 billion in revenue. As a result of that, I guess I'm seeing this as having some legitimate possibility of becoming some legislative changes. In addition to the revenue generation ideas and that we talked about, there's also an initiative on enforcement and audit tactics. And what that really requires is a huge increase in spending. We're price tag about 36 billion to help in the tax collection and shore up the abuse on tax rules. So if that were to happen, right, then, we're looking at, the IRS becoming more active in audits and its target as far as checking in on businesses and so forth. So we'll keep our eye on that, but that is one of his agenda items we want to be aware of. And then number 10 I have here is there's a good amount of increases in tax credit opportunities, whether from a dependent care to a child tax credit to energy. There's going to be opportunities out here to also have some credit generation in this process. So as a nutshell, this is what I guess we want to make everybody aware of. in the event that we start hearing some discussions as far as the bills moving through and what maybe some of the motivations and then the outcome in your own business. And then from a planning perspective, right, there's some things we can do from a planning perspective. We can make gifts and transfers before now, but before any law changes. But the reality of it is we just want to be aware of it and start strategizing and preparing for these types of possibilities.
And thank you very much. And thank you all presenters. We do have a number of questions, so we're going to transition into the Q&A. If you have more questions, certainly add them to the Q&A. So, and all of you all presenters, feel free to go in there and start tackling some of those. But there was one that we had earlier. If I had already applied for forgiveness and it has been accepted, however, my forgiveness was reduced by the 10,000 EIDL grant, how do I now get the 10,000 forgiven?
Yeah, Dan, I'll take that. Yeah, so the SBA will be making the payment to the bank, just as they did with the first payment. So there will be an additional payment. What we've heard is it's going to take them a couple weeks to go through those that have already been, forgiven, and that amount was deducted from the payment. So it'll get to the bank, and then the bank will get it to you or pay whatever residual loan is left. So it'll all get trued up, but it's going to take a couple more weeks.
Great. How are banks handling the underwriting of loan renewals or future loan requests for businesses that took out PPP loans in either round? So you might have addressed some of this, but some of these questions were submitted earlier. But
yeah, I can take that one. It's going to be a lot more work, like most things nowadays. But we're going to take it case by case. We're going to look, dig deep into your 2020 financials, see how a company has truly recovered, what they've done, when they've recovered, how long it's been, and try to make a judgment based on what's going on. Not just look at the overall 2020 financials. That's the easiest way to go, but that doesn't work for people. So we gotta just have our homework ready and go into it and figure out what they can really handle for debt service going forward. So it doesn't hurt you necessarily. Obviously, it's a good thing to help you get liquidity to get through and survive. So yeah, going forward, it's not necessarily a negative or positive.
mm-hmm. Larry, this one might be for you. Any relief tax deductions for landlords who have, for whatever reason, not collected rent?
Well, I haven't seen, I guess I don't quite understand the question. So if they haven't received rent, are they going to be entitled to any sort of a tax credit or deduction?
I think that's what they're getting at.
Yeah, I mean, most landlords have to deal with their lender when they don't get rent payments, because that's going to create a covenant default under their lending documents. And so the first place that most landlords are going is to talk to the lender about essentially an equivalent deferral period. But I'm not, and I know the landlord feels sort of like the forgotten man in this whole process here, where they expect them to just sort of forbear and forbear and forbear. We do have a lot of a lot of landlords that wonder how long are they supposed to have to bear the brunt of this. But I've not heard anything about the tax credit.
Mm-hmm. Sticking with the real estate idea, if the STARKR, that 1031 exchange, the like-kind exchange is eliminated, how do you think that's going to affect the real estate market, the commercial real estate market? Any impact at all?
I think it's a huge game changer. I do not see, certainly it takes cash away from being able to reinvest. So, right there, the amount of cash available to make acquisitions of real estate projects is going to be harder. And then, so I think as a result of that, you're going to see maybe less transactions, and I think it's going to have a significant impact on that industry.
Maybe Dan again, based on your comments around the Biden tax platform, what are you and others can chime in? What are you advising and sharing with your clients to prepare for some of these possible changes? These are big potential changes that are probably more likely than not.
Yeah, it's really difficult to, tell people this, but I think the deferral of income might not be your best play. Certainly, we had a big push towards the end of the year of a lot of businesses selling because they wanted to make sure that the capital gains treatment they got for the sale of their business was not going to be impacted. And in some cases, transactions were discounted to make that happen. So we did see some of that. We have the estate world where we had a lot of gifting and people using up as much of their exemption as they could and still preserve enough cash flow in their everyday life so that they could live the lifestyle they want to, and in essence, gifting things over. So those are probably our two primary plays that we've been kind of trending at this point. And, utilization of depreciation and so forth, whether accelerated or not, might be something that we think twice about, not necessarily conclude that we're not going to accelerate it, but it's something we want to at least start thinking about and being strategic about.
Lori, it's not exactly what we were talking about today, but it's very much related because we're still in the time of COVID. You mentioned, discrimination or potentially being open to discrimination. What are some other key factors and elements that employers should be aware of as individuals? Some are still at home and not wanting to come back, or coming back and liability. Anything you can advise or throw out there as a good reminder, as a best practice for companies, as the vaccines picking up, but we're still not out of the woods.
Sure. There's a lot of questions that our employers are asking. One of the things I tell them is make sure that they're looking at every law that possibly could apply when you're talking about, for example, leave or employees not wanting to come back. What I've said in previous sessions like this is oftentimes you have return to work, everybody's trying to get everybody back in the workplace, and you have employees who don't want to do that. And you really have to dig down and figure out what the reason is, because it's possible that the reason is, something that is associated with a disability. For example, I've had employees with autoimmune or lupus or diabetes or various things that make them particularly vulnerable if they were to contract COVID. So oftentimes when requests like that come in, you of course have to figure out whether there's an accommodation duty. But with respect to all of these policies, whether it's a mandatory vaccination policy, or you're simply just encouraging it, or you are talking about coming back to work, or you're talking about COVID leave, the key, of course, is to make sure that employees are treated the same in the same circumstances, so that you're not sacked with that discrimination claim.
Mm-hmm. Yeah, great thing to remember. You can't be too careful, I'm sure. Can a business have more than one PPP loan? Has the forgiveness process been streamlined for loans under 100,000?
So yeah, this is Jeff. Well, yes, they can have a second PPP loan, because that was what the whole the next round of funding was for. So there are those situations where if they've used up their first PPP loan in its entirety, and they've experienced a 25% or more revenue reduction from 2019 to 2020 on an annual or quarterly basis, then they're eligible. If they were already eligible for a PPP loan, which they would have been, they got a first one, then they can apply for a second PPP loan.
Sure. But
if you are a business, you can't just then get a third one, or until this program opened up, you couldn't get a second one.
mm-hmm.
There is a theory floating around that if you act quick enough and you haven't gotten a first one, you can get a first one and a second one. You have to move really quickly, have an 8-week covered period, have it taken care of. But obviously that's going to die out as the next couple of weeks burn off, if there's no extension of the March 31st deadline. Just in case people wanted to try to be super creative again.
Yeah, super aggressive.
Yeah.
So this question is an interesting one. Define gross receipts. Would gross receipts include unrealized gains and losses in an investment, which is included on a financial statement.
I'll throw that to an accountant. I think I know what my answer is, but I want to hear an accountant.
Dan?
Yeah, this is Nancy. I'd want to go back and look at the rules, but they're very specific if you look at the guidance. And I think we probably included in one of those resources. But it is very specific as to what it includes in there.
Yeah, and I'm pretty sure those kind of one-time extraordinary items are not included. So I think, again, it's how you would normally think of your business in an operating environment. What are your gross receipts? That's the easiest way I can put it, and kind of what shows up on your tax return, absent those one-time or extraordinary items, like, again, gains on sale or things like that.
And we received a lot of questions of people asking if the first PPP should be included in there.
And it should not. That definitely was excluded.
Right.
Yeah, that was explicitly excluded in the latest legislation.
So Jeff, this is Nancy, and I actually have a question for you that we're getting a lot of questions on, so I'm sure you are too. In the eligibility for the second one, that the first PPP has to be completely used. There were many cases because the SBA was changing the rules as people were applying the first time, and then the rules changed to limits, that in that first PPP, people received more than they should have. So then when more clarification came out, let's say someone received a loan of 100,000, but they were really only eligible for 90. So in the forgiveness, they're only getting 90 forgiven. So technically they haven't used 100% of the proceeds on the first. Is this a situation where you can go back and include some additional items that are included in round two to get that additional 10,000 forgiven in round one and still apply for round two?
Yeah, I think if I'm tracking, yeah, they wouldn't, if they weren't eligible to get that full forgiveness or that 10,000 because they didn't spend the funds, or they got too much of a loan, and they acknowledge and recognize that, so they only applied for forgiveness at 90%. What I would say is just make sure that extra 10,000 that you've spent that on eligible expenses outside of the covered period, so that you didn't just do something that wasn't an eligible use of the proceeds. So for additional payroll or other expenses that are outside of that covered period, or in addition to maybe what you put on your forgiveness, because that was what was eligible, then you should be fine. You would be able to, in my opinion, you would be able to check that box on the second PPP application that you used all of your proceeds on eligible purposes.
Perfect, thank you.
Nancy, with your topic, the employee retention, what percent of your clients, or what percent of the available funds do you actually think have been accessed? Or,
Very little.
most people are not taking advantage of that.
They are not taking advantage of it. I think right now, I think we're going to hear a lot more about it, since they've loosened it up a little bit. I think it was probably a little bit difficult with the original eligibility requirements, but now that they've loosened those, I think there's a lot of people that could be eligible that are not taking advantage of it. I have seen some payroll providers send out notifications to businesses kind of saying, hey, are you aware of this? That might prompt people to jump on board a little bit, or to at least have some background on what this credit is. But honestly, I'm seeing very few people taking advantage of this. And I do think it was very hard to understand for people how the credit was calculated, what it meant, how you got it refunded. So I encourage people to really look into this.
Yeah, Nancy, I think one thing you want to add to that is that prior to this bill that just passed, you could not apply for the retention credit and also the PPP forgiveness. So as part of this new tax bill, or the new bill that was signed between Christmas and New Year's, you're now that restriction was removed. So you could both apply for the PPP loan and then also the employee retention credit. So now we're having businesses go back and look for for 2020 again to see if that, I got the PPP money, now I'll kind of look for the retention opportunity.
Right. Great point, Dan. Yeah. Originally, it wasn't just you couldn't use the wages, you just couldn't apply for it. And so now it's just you can't use the same wages.
If I recall, Nancy, that's where you said the fun started, when they loosened it up a little bit and
Correct.
maybe more accessible now.
Yep.
Fun, in a good way. If we received the previous PPP loan, can the same calculations and documentation be used for a second PPP loan app? Generally, yes, right?
Yep, yes.
Yeah.
If it was based on 2019 information, that is allowed for the next calculation. So you can use the same stuff that you use for that first loan for the calculation for the second loan.
How many do you feel are first, or how many do you feel are this second PPP is the first loan that some of these organizations are applying for? Like, are most of these second applications, or most of these first, or is it a combination?
It's a combination, but I would say the vast majority are second loans. I think the program was so widely publicized, and there was such a lot of people got in, and it'd be an interesting situation if somebody didn't apply the first time. But certainly we're seeing some businesses that this is their first loan. They've had more issues throughout 2020 or 2020, and so they decided that now is the time to go ahead and apply for the first loan.
Sure.
I think one of the things too that I want to just point out real quick to people is that don't automatically use the same application or information that you did the first time, because now they're also allowing life, disability, and dental insurance in that insurance, which I don't think a lot of people included in their first round. I think people were sticking to just health insurance because it was such a gray area. So now I think they've clearly said that disability, life, and dental insurance can be included in calculating the loan amount. So I wouldn't just automatically use the same application and amounts, because I think people could be missing a little bit. Might not be a lot, but hey, any little bit matters.
Well, as long as it's legal.
Absolutely.
So on that note, supporting documents aren't needed on this front end. Is that where the 150,000 comes into play as well? That could be audited, down the line.
So are you talking about for the new?
Yeah.
loan?
Specific documentation, supporting documents during the application process, or is it just a number?
No, they'll still need to supply, and provide supporting documentation for the payroll information that they're using for their loan amount. The one piece that if you're under 150, depends kind of how your bank looks at it, but they don't need to supply that revenue reduction documentation. They can make a certification about that, but they will need to supply that prior to or on forgiveness. At Old National, we're asking for it on the front end for all loan sizes, just to make sure that the calculation is correct and we don't have an ineligibility issue. So, I would encourage people to do that, to just, have your documentation. You might as well submit it now, then you won't have to submit it later, and you won't have any surprises down the road. But that definitely is something that could be passed along later.
Hey, Jeff, what kind of documentation is the bank looking for from a revenue reduction perspective? We've seen multiple different requests of, hey, I need all of 2019 and all of 2020, or is it focused on just purely the quarter that had the reduction? Any guidance on that front?
Ultimately, we'll take what they provide. So if it's a year over year and they've got annual statements that show it, we'll take that. Our online portal allows them to, say it's an annual comparison, 2019 to 2020. But if it's easier, they have information from a quarterly basis, then we'll use that. And then they have to, obviously input that information. But it's really kind of up to how the company looks at it. And, we just said, be consistent. If you do cash or accrual, give us your quarterly statements so that they're both cash or they're both accrual. we haven't gotten too knotted up if it's if they do accrual on an annual basis, but their quarterlies, it's cash. We don't see the annual ones. We're just looking at the quarterly ones if that's what they provided. As long as it's consistent quarter to quarter, then we're going to take what they provide us.
There was an interesting question, I don't know if it's appropriate, but regarding the second PPP, many companies have shored up their working capital over the past 7 months, and their access to capital is perhaps stable, yet they are still struggling to make money. Does this questionnaire requirement regarding access to capital still apply, and how may it impact round 2 of PPP?
So you still, oh, go ahead, Jeff.
No, go ahead. I'm gonna let you.
You still have to make the same certification. You still have to be prepared to make the same certification that you made the last time. I just want to make the distinction. The loan necessity questionnaire, or LNQ, is only for the 2 million plus category folks. So the folks that were told by Secretary Mnuchin, et cetera, that they were going to be the subject of these audits. So I don't know if Jeff, you have anything to add to that?
Yeah, what I would say, so exactly, if it's over 2 million, they are going to look over your shoulder and look back and make sure that, okay, if it was economic, it wasn't a necessity for you to get that loan. For the loans under 2 million, we're not getting any questions around that. Ultimately, what they're looking for, they're looking at eligibility. Were you an eligible business? Did you calculate your loan correctly? And then did you calculate your forgiveness correctly? So for the ones that are going through that manual review process, that's what they're focusing on. They're not getting into anything else as it relates to, did you need the money? Did you not need the money? It's really around those 3 primary issues is where the questions are coming from.
Larry and Jeff, I think I saw a question out there related to, we have a lot of businesses that individually apply for the loans that are affiliated groups. And, so one group might have $1 million, the next one might have 2 million. So do both, are we seeing the SBA requesting the necessity questionnaire for both affiliated groups, knowing one of them's below $1 million?
I have not to date. We have not seen, again, they got to check that box on the forgiveness application. And certainly on their initial application, they had to check that box that they were affiliated with other entities, and combined they were over 2 million. But to date, we have not seen a questionnaire come through for a business that directly had a loan for less than 2 million.
So before we close, I want to give everybody the opportunity to input any other last minute elements regarding this topic that you'd like to share that weren't asked, that you get from your clients. Maybe Lori, can we start with you to see if there's anything that you might want to add to, or re-emphasize that is important that people should know about?
Isn't everything with employment, the key is to communicate to your employees what you do and how you're going to do it. I mean, really, that's really the gist. I'm getting questions that really run the gamut on a daily basis, and they all seem to stem from COVID in some way. The vaccinations rollout is a big deal right now. And so really it's about deciding what the plan is, and then obviously making sure that you're not running afoul of anything when you're doing it, and then making sure that you're being consistent among the people. With regard to this legislation that we've been talking about today, we went through the fact that medical leave is no longer mandatory. What was mandatory under the CARES Act is no longer mandatory. Well, that leaves a lot of discretion to employers, and so the key is, of course, to just make those decisions now.
Mm-hmm.
How you're going to move forward.
Great input, thank you. Larry, any final words of wisdom, insight you want to share?
Sure, I have just 2 quick points. The thing that we have been seeing a lot of most recently, other than forgiveness application questions, are these change in control scenarios. It's a relatively simple process once you understand what you're doing. It really helps to talk to a professional if you are trying to understand it. I guess the key takeaway from that is that you do not need, in most circumstances, unless it's a hardship claim, you do not need formal SBA approval. The lender can give you the approval that you need or can consent to the transaction after examining it on a relatively cursory basis. And that essentially consists of providing a copy of the asset purchase agreement or whatever conveyance document there is, being prepared, as I said, to escrow the money. And then you also have to have your forgiveness application submitted, which is really the big piece on that. And then otherwise, I guess in terms of the expanded area of expenses, it's great that there are these 4 new categories. But we do find that most folks are able to use the payroll category. It's really the safest place to be, especially since it's now expanded, and it really is the biggest cost. So while these other areas are available and are great, they can only, folks had a tough time getting up to 40% in that category in any event. So maybe it's a little bit easier, but folks really didn't have a problem spending 60% or more on payroll. So we still expect that folks are going to put most of their reimbursable expense categories there.
Yeah, interesting. Great, thanks. Paul, any last words from you?
Yeah, I'd say if you have questions, reach out to your banker ahead of time. It could save you a lot of time on corrections later, pulling out your hair and going back and forth. Just reach out to your banker. We got resources. We got guys like Jeff at our bank, and every bank's probably got the similar situations. So communication on the front end to help you do it right the first time will save you time later.
Thanks. Yeah, I'll speak on behalf of you all. I know we didn't get to every question, and the contact information is on these slides. So I'm sure that you'd be happy to answer some of the questions that were on here that we couldn't get to today. Jeff, our SBA extraordinary expert.
Yeah, right. Hopefully I didn't say anything too wrong. Yeah, I guess I'd say a couple things. I suppose it's a bit of a shameless plug, but you don't have to use the same bank that you used on your first PPP loan. So certainly if they're not open, if they're not ready, if you didn't like the experience the first time, there are other options. Old National is one of them, and we'd love to help you out with your second PPP loan and see if we couldn't help you out in some other ways with your business. And the other thing is too, as it relates to forgiveness, I think it's important to know that you only need to get enough forgiveness in your application to get your loan fully forgiven. So don't worry about, okay, I got to put all my payroll, I got to put all my lease expense, I got to put all my interest expense. You only need to put in enough information and apply for enough forgiveness to get your loan fully forgiven. Anything beyond that, we as the bankers, we're not looking at. The SBA might look at it if there's a review because you provided it, and so they're trained to kind of look at all the paperwork you provided. So make it as easy as you can on yourself. Focus on payroll, and if you can get fully forgiven on your loan with just payroll, then just go with that and don't worry about the rest.
Yeah, keep it simple.
Yep.
Dan, how about you?
So there's one topic that I guess I want to make sure I kind of hammer home. It's on the PPP deductibility of the forgiveness. So for federal purposes, right, they changed the law, and then it's not the deductions are allowed and the forgiveness is not taxable income. However, the state of Wisconsin and other states are not following, or they're basically translated into a taxable situation. So currently the state of Wisconsin accepted the first bill that went through in March, which made it was not taxable income, but the IRS came out and said the deduction was not allowed because the income wasn't taxable. And so that's the current status of Wisconsin's law. We're looking for legislative changes to correct that, just like the IRS or like the federal government did. At this point, we're not seeing a lot of traction in it. So if anybody can get out there and get some lobbying going, I think that's something that would help us all. And because I think this was intended to help people and not be a revenue generation for the state of Wisconsin.
I'm glad you brought that up. I think I suggested that they probably spent the $500 million already that would have been kept by the employers had that been not the way it is. So Nancy, you've got the last word.
Yeah, so I think probably similar to what Paul said, I just want to say, don't be afraid to reach out to a professional to get advice on any of this stuff. I know this stuff can be very complicated. I know that everybody that was involved, the panelists in this call today have extensive knowledge on the rules to all of these programs. So I think it's important that you reach out to a professional and make sure that you're getting the best advice that you can get, because at the end of the day, you want to maximize the opportunity of extra cash that you can get in your business. This is a hard time for everyone. And if we can help people maximize that, you know, we have no problems contacting the bankers. If it's a client of ours, if there's some concern the bank has, you know, we'll talk to the Pauls and the Jeffs and see what's going on and figure out if together we can do things that maximize the opportunity for the client. So don't be afraid to reach out to the professionals. I think we're all here to help people. And I think that these are a lot of good programs.
Yeah, that's great advice. Let the experts do what they're good at. So, well, this concludes our program. Thank you all for attending, and I'd like to thank our presenters and partners. Just to recognize and introduce them again: Larry Glussman and Lori Meyer with Davison Kielthau, and Jeff Roseland and Paul Sackman with Old National Bank, and Dan Glomsky and Nancy Melberg with SVA. Thank you very much. They are the experts. And as I said earlier, you can find their contact information on the slide, and I know they welcome any questions that weren't answered today. They're happy to help you regarding issues related to what we talked about, you know, the recently signed COVID-19 relief bill, or any of the other issues that we've covered today. The new administration will mean more change is on the horizon, and it started yesterday. So make sure that you're aware of all these future changes. Employer issues, as Lori was saying, extremely important, and tap into the knowledge of these professionals. So as I mentioned earlier, the webcast is, the recording is going to be available probably later today, certainly by the morning, and the slide deck will be available as well. We value your feedback as we look to have more webcasts like this in the future. So we would appreciate if you filled out an attendee survey, which will open in a new tab once you close the webcast tab in your browser. So with that, we are concluded. Have a great rest of the day, and go Packers this weekend, and we'll see what happens there. But thanks, everybody.
Thanks, Dan. Thanks, group.
Yeah.
Bye.
Thank you.